Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. Well, 2021 could well be characterized by two words: lot of M&A activity, lot of primary market activity. I'm sure a lot of earnings upgrades over the course of the year, and a lot of liquidity, hopefully, because we need liquidity to support all of this. Somebody who's got a handle on how is the activity within the primary markets, within the M&A space, and arguably within all things equities and asset classes is our guest today, Anuj Kapoor. He's MD and Head of Investment Banking at UBS, joins us right now on the show. Anuj, can you hear me?
Yes, I can, Neeraj. Good morning and thanks for having me here.
Oh, the pleasure is ours, Anuj. So, Anuj, let's talk about this, right? I mean, I think the essential ingredient in all of this would be liquidity. Would you reckon, based on your conversations with on existing deals, on potential deals, on deals which will happen over the course of the year, that there would be enough appetite for deals and primary market issuances and maybe even secondary issuances in general through the course of 2021?
Sure, Neeraj. I think in general, we are quite positive about the flows into India even this year. 2020 saw record flows into India from foreign institutional investors, something to the tune of about $23 billion. And this is quite unprecedented and the highest in the last decade. The last time we saw such flows were seriously into India were after the credit crisis. Now, when I look into this year, I think India's positioning as far as the emerging market landscape is concerned is still quite positive. And there are a few factors which help India in terms of tailwinds as we are coming out of COVID as well. The economy has begun to look up, and we are seeing early offshoots of that in corporate earnings. And the results of the recent December quarter so far have been quite positive. We've seen more beats, actually close to about 80% of the results thrown up by companies in the recent quarter have been ahead of estimates. Now, what all of this does is the fact that there is a lot of liquidity. There is still a lot of stimulus being injected into global financial markets by central banks. Enables flows to come into emerging markets. And while in 2020 the emerging market index outperformed the global markets as well, I think India's positioning currently allows it to attract these flows into 2021 as well. I'll be very happy if we can repeat the $23 billion of last year, but I still see a lot of positivity for India and deal activity in 2021.
Okay, so let's divide this into two halves. And one is, of course, the flows that come into the primary markets, which is fine, which I think a lot of people are aware of. What a lot of people are not aware of is the kind of activity that is happening beneath that listed surface, right? One, even primary markets still have some knowledge. On the M&A side, the kind of appetite, the kind of conversations, not too many people are aware of. So let's kind of divide this into two, Anuj. And let's start off, can we start off with primary markets? Because those are pretty hot. We've had about 4 or 5 IPOs that have come out thus far in 2021, some of them pretty well subscribed, and the pipeline seems to be robust as well. What's your sense? How are you working on some of these, and what's the kind of appetite do you think some of these large ones will draw?
Sure. I think it's important to stratify, the equity market activity last year and coming into this year as well. So in 2020, for instance, the equity volumes were to the tune of something close to $37 billion. And a lot of it was dominated by follow-ons through QIPs or rights issues. And there were a lot of block transactions as well. IPOs really picked up towards the last quarter of last year, the calendar year I'm talking about. And out of this 37 billion, roughly about 4 billion of issuance was through IPOs. Now, as we step into 2021, what we are seeing based on our dialogue with companies is that given the momentum in the market and the performance of secondary markets over the last few months, investors have made money. And hence, the environment is actually quite conducive for primary issuances through IPOs. So we are seeing companies actually accelerate their plans as far as accessing capital markets is concerned. Even companies which were looking at 2022 as a potential IPO window are now trying to see if they can capture this market window and look at the second half of this year for IPOs. So I think overall the environment is quite robust for primary issuances. And if you ask me about my outlook for this year, as opposed to $4 billion of IPO issuance last year that India saw. I feel that this year we should comfortably be doubling that. In fact, we should be well in excess of that, seeing the IPO pipeline that we have and the pipeline across the street.
Yeah, so Anuj, a lot of people make out or predict that 2021, from a primary markets perspective, would be a different year than any that we've seen. In that, the nature of the companies coming out, we don't have too much of pure tech representation of sorts, save for IT services, and except one or two platform companies, not too much, and therefore that will, in a way, set a whole new breed of companies and themes within the Indian primary landscape once these companies list. And that nuance or that niche factor itself will attract a lot of attention. Any thoughts there? Because obviously valuations play a part, but niche nature of the business is also kind of play a part. So what would your opinion be on that very aspect? And if you were a part of some of these in the upcoming 12 months, would you believe that your advice would be to the companies to take a table thumping valuation because of the nicheness of the business, or would it not be that way?
Sure, and that's a very topical subject, especially with the debate going on around tech IPOs and IPOs of profitable companies versus non-profitable companies, and also, the SEBI, perennial sort of debate around allowing Indian companies to directly list overseas or not. And we're hoping that we see regulation to that effect in this calendar year. I think Indian markets have matured a lot over the last few years. The kind of flows and the kind of activity that we have seen, almost all or a lot of the majority of global foreign institutional investors are actually playing the Indian market, and we are seeing newer investors coming through all the time as well. I think the Indian tech market offers a very unique opportunity. It's the third largest technology market in the world, and I'm talking about the new age technology outside of US and China. And when global portfolio managers sitting in the US or in Europe think about investing in tech, they can't not think about India. And if you look at the opportunities in the listed space that are available in internet tech in India, they are absolutely very, very limited. And even those companies that are listed today, actually, when they IPO'd, those IPOs were, 100 to 200 million and nothing more than that. I think 2021, given the way Indian technology companies have matured and the investor thinking has evolved, especially coming out of COVID, where technology is clearly seen to be playing a significant part in the future of almost all businesses. I think 2021 is going to offer a watershed moment for primary issuances in technology in India. The fact that Indian companies in the technology sector are actually now on the verge of breaking even or have broken even and have proven business models is something that is well understood by not just global investors, but even domestic investors will very readily accept that as well. So I think it's going to be a good time to tap the markets, and there is a clear understanding of such business models, so long as things like unit economics are established and the overall sort of market positioning and the target market assessment has been made. And there is a clear path to profitability. I think investors will lap up these IPOs, and we will see primary issuances of size and scale happening for the first time. And my view is that those will be very well accepted, actually multiple times oversubscribed. I think to the second question that you raised around should companies of such nature be targeting very hefty valuations, I think it's a fine balance that needs to be maintained between the valuations that you target versus allowing sufficient and healthy aftermarket activity in some of these stocks, as well as the fact that who all and what kind of cap register that you want. So I think maintaining a healthy balance amongst all these aspects is very, very important. IPO is not the end game. It's actually the beginning of a journey of a life cycle of a company in the capital market. So doing it at a sensible valuation and leaving a little bit of money on the table for the investors goes a long way in winning investor trust and allowing them to come back and invest into the company.
I heard you mention that you are hoping for the regulation for Indian companies to be directly listed overseas coming up soon, the technicality being done soon. Well, the FM has spoken about it on multiple occasions. Should that be a reality? Ceteris paribus, Anuj, on the market side, would you reckon that some of the tech plays might be better off listed directly over in the overseas bourses? Or do you reckon the Indian bourses will find an appetite for such names, because most of these, as you said, might still be loss making, and those entities do have a very large market in the US because such businesses are recognized very well there? Or do you think that Indian bourses will be almost equivalent in terms of the the appetite that these companies can derive?
Yeah, so I think I'm a big believer in the Indian stock markets, and they're amongst the largest stock markets in the world today. As I mentioned, almost a lot of the large global investors are already present here, so they have a way to play the Indian stock markets. Uh, I think a lot of the consumer plays and brands which have a connect with the Indian population on a day-to-day basis will certainly find a home and wide acceptability amongst Indian investors into the Indian market. So domestic IPOs would be the logical way for them to go, and we've seen a couple of companies potentially looking to go and access Indian markets this year in the tech space. I think where the global markets provide a distinguishing sort of platform is really very niche plays or certain sectors which are better understood in, let's say, on NASDAQ or on NYSE because of some of the global companies also being listed here, and just the sheer sort of size and scale of and the depth of the market there. I think for some of the larger IPOs, perhaps where business models are understood better in the US and the right comps are available there, I would think that US markets would provide a much deeper pool of capital, and hence those are the sort of companies which will access the US markets, or for that matter, London or even the Hong Kong Stock Exchange in times to come.
Got it. What about M&A activity, current or prospective? How do you see it? Is there a lot of activity happening? And what's the nature of this activity? Where are the themes wherein the large portion of investors' appetite is coming through? Companies or PEs?
Sure. I think we've seen a significant pickup in M&A activity over the last 6 odd months. In 2020, when COVID struck, a lot of the focus for companies as well as private equity and investors was inward looking. They were more focused on their own businesses and portfolio companies and trying to sort out the issues that were being faced as this calamity suddenly struck. As they look to reorient business models, invest in technology, reorient their strategies, I think coming out of COVID, we've seen, so there was a pause in M&A activity to some extent, or certainly a slowdown from the period, I would say, from about April, May last year to close to August. But post that, we've seen a significant pickup in activity because there is liquidity, there is money to be deployed with the sponsors and sovereign wealth funds. And even strategics, as part of their growth strategy, are looking to integrate inorganic growth as part of their overall strategy. So we've seen a lot of pickup in M&A activity, and we are keeping very, very busy on this front. I expect that to continue because to some extent there is pent-up demand as well, because as I mentioned, for 4 or 5 months last year, it had slowed down quite a bit. And in terms of themes, I expect inbound activity to certainly far outweigh outbound, because I think Indian businesses are just the sheer opportunity offered by the domestic market allows Indian businesses to just focus on the Indian market and capture that opportunity first. And secondly, some of the Indian balance sheets are still leveraged, and leverage is being, those are getting deleveraged for the time being. So I expect inbound activity to be the dominant theme going forward. Also, in terms of sectors, I would say technology, financial services, infrastructure, and to some extent healthcare will continue to dominate. And private equity is going to be a major player. Again, we saw flows through FDI into India close to about $50 billion last year. And I do expect that number to grow this year, just given the amount of fundraising that has happened globally across VCs and private equity funds.
Yeah, I mean, we've seen a bunch of pharma names being acquired, some being in conversations, if the rumors mills on the street are to be believed. My final question, Anuj, would be, do you reckon that, I mean, the obvious answer is that it'll be across the spectrum in terms of size. But do you reckon that we'll see more of large deals being struck on the M&A side inbound in 2021, or will it be a bit of a string of pearls largely, wherein a lot of people come in for a lot of smaller deals, test the waters, and then do more? Or do you reckon that is already done and we'll actually see larger deals?
Yeah, I think it's going to be a combination. I don't expect that to change dramatically in this year. Last year was characterized by a couple of large transactions done by Reliance Retail and Reliance Jio platforms. Larger deals, yes, are the preferred mode for investors or even strategic players for that matter today, who are embedded into India, who are invested into India, who understand the Indian economy and have been around for a few years. And slowly, as they have gotten comfortable with the transactions and the exits that have happened on some of their investments, that have made them more comfortable. And today, especially the private equity global investors are looking at larger transactions. Having said that, there is space and there is appetite for medium to smaller size deals as well. And there is a class of investors who look at those as well and will continue to do so.
Okay, Anuj, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us some sense of where or what the mood is around the activity street, if I can call it that.
Thank you. It's a busy time. I hope it stays this way.
Yeah, stay safe and thanks for being with us today. And viewers, thanks for tuning into this edition of The Talking Point.